Cryptocurrency options trading, key strategies and platforms. Cryptocurrency options trading has gained significant popularity in recent years as more traders seek to diversify their investment portfolios and capitalize on the volatility of digital assets. Options trading allows traders to speculate on the price movements of cryptocurrencies without actually owning the underlying assets. In this article, we will explore the key strategies and platforms for cryptocurrency options trading. Key strategies for cryptocurrency options trading. Call and put options. Call options give traders the right, but not the obligation, to buy a specific cryptocurrency at a predetermined price, strike price, before the expiration date. Put options, on the other hand, give traders the right to sell a cryptocurrency at a predetermined price before the expiration date. Traders can use call options to profit from a bullish market outlook and put options to profit from a bearish market outlook. Long and short positions. Traders can take long positions by buying call options or put options if they believe the price of a cryptocurrency will increase or decrease, respectively. Conversely, traders can take short positions by selling call options or put options if they believe the price of a cryptocurrency will decrease or increase, respectively. Long positions are more common among retail traders, while short positions are often used by institutional investors and sophisticated traders. Hedging. Options trading can be used as a hedging strategy to protect against potential losses in a cryptocurrency portfolio. By purchasing put options, traders can mitigate the downside risk of their existing holdings. Similarly, traders can sell call options against their long positions to generate additional income and offset potential losses. Straddle and strangle. Straddle and strangle are advanced options trading strategies that involve buying both call and put options with the same expiration date and strike price. A straddle strategy is used when traders expect significant price volatility, while a strangle strategy is used when traders expect moderate price volatility. These strategies can be profitable if the price of the underlying cryptocurrency moves significantly in either direction. Delta hedging. Delta hedging is a risk management technique used by options traders to adjust their positions based on changes in the price of the underlying asset. By continuously adjusting the delta of their options positions, traders can maintain a neutral or directional bias in their portfolios. Delta hedging is particularly useful in volatile markets where price movements can be unpredictable. Cryptocurrency options trading platforms. Binance Options. Binance is one of the largest cryptocurrency exchanges in the world and offers a user-friendly options trading platform for both retail and institutional traders. Traders can access a wide range of options contracts with various expiration dates and strike prices. Binance also provides advanced trading tools and analytics to help traders make informed decisions. Deribit. Deribit is a popular options trading platform specifically designed for cryptocurrency derivatives. Traders can trade Bitcoin and Ethereum options with leverage and low fees. Deribit also offers a comprehensive range of options strategies, including straddles, strangles, and spreads. The platform is known for its robust security measures and high liquidity. FTX. FTX is a leading cryptocurrency derivatives exchange that offers options trading for a wide range of digital assets. Traders can access options contracts with different expiration dates and strike prices, as well as innovative products like move contracts that allow traders to speculate on price volatility. FTX also provides a user-friendly interface and competitive fees for options trading. OKX. OKX is a global cryptocurrency exchange that provides options trading for various digital assets, including Bitcoin, Ethereum, and Litecoin. Traders can choose from a range of options strategies, such as call and put options, straddles, and spreads. OKX also offers a secure trading environment and 24/7 customer support for traders around the world. Conclusion. Cryptocurrency options trading offers a unique opportunity for traders to profit from the price movements of digital assets without owning them. By employing key strategies such as call and put options, long and short positions, hedging, and advanced strategies like straddles and strangles, traders can enhance their trading performance and manage their risk effectively. With the availability of advanced options trading platforms like Binance, Deribit, FTX, and OKX, traders can access a wide range of options contracts and innovative products to capitalize on the growing cryptocurrency market. As with any form of trading, it is essential for traders to conduct thorough research and risk management to navigate the complexities of cryptocurrency options trading successfully.